Hey everyone, welcome back to Corporate Decoder. Today we're diving into a document that reveals what's happening behind the scenes at nVent Electric. It's not quite a shocking plot twist, but definitely a few interesting turns in the road ahead. Think of it as opening a birthday gift but finding out that your relatives actually knew what you wanted. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can share your thoughts and questions on corporate filings. We're looking at an 8K filing from nVent Electric, dated May 16, 2025. An 8K is basically a company's way of saying, hey, something important happened and we need to tell the SEC and our investors about it right away. In this case, it's about the results of their annual general meeting of shareholders. So, what did the shareholders decide? Let's decode it. First off, the meeting happened on May 16, 2025. Almost all the shares that could vote were represented, over 90%. That's a good sign. It means shareholders are engaged and paying attention. The first big item was electing directors. Shareholders voted on 9 people to be on the board for the next year. Looking at the numbers, all 9 nominees were elected. Sherry Holm, Jerry Burris, Susan Cameron, Michael Ducker, Danita Ostling, Nicola Palmer, Herbert Parker, Greg Shue, and Beth Wozniak all got the thumbs up. Most of them had overwhelming support, but let's look at one person in particular. Beth Wozniak got fewer votes for than against. This could mean a few things. Maybe some shareholders aren't happy with something she's done, or maybe there was a campaign to vote against her. Either way, it's something to keep an eye on. Next up, shareholders got to give their opinion on how much the top executives are paid. This is a non-binding vote, meaning the company doesn't have to change anything based on the result. Still, it's a way for shareholders to voice their approval or disapproval. Most shareholders voted in favour of the executive compensation, but there was still a noticeable chunk, roughly 7 million votes against it. This suggests that some investors feel the executives are being overpaid or that their pay isn't aligned with the company's performance. It's a point of contention. Then there was a vote on how often shareholders should get to vote on executive pay. The choices were every 1 year, 2 years, or 3 years. Overwhelmingly, shareholders chose to vote every year. The board approved this decision, so they will be including a non-binding shareholder advisory vote on the compensation of the company's named executive officers in the company's proxy materials on an annual basis until the company's 2031 annual general meeting of shareholders. This tells us that investors want to keep a close eye on executive pay and have a say in the matter regularly. The shareholders also voted to approve Deloitte and Touchel as the company's independent auditor for the year. Almost everyone voted in favour, which is pretty standard. It means shareholders trust that Deloitte will do a good job of auditing the company's finances. The next few proposals deal with the company's ability to issue and manage its shares. Shareholders voted to allow the company to create and sell new shares to avoid giving existing shareholders first dibs on those new shares and to decide the price range for reselling shares they already hold. These are pretty technical things, but they basically give the company more flexibility in how it manages its stock. Opting out of statutory preemption rights means that when the company issues new shares, they don't have to offer them to existing shareholders first. Again, this gives the company more flexibility, but could dilute the value of existing shares. Diluting the value of existing shares can be a cause for concern. Treasury shares are shares that the company has bought back from the market. This proposal allows the company to resell those shares, but it sets a limit on the price range they can sell them for. Now let's put all this together. What does it tell us about nVent Electric? Well, first off, it seems like the company is in pretty good standing with its shareholders. Most of the proposals pass easily, and the board has the green light to keep doing what it's doing. However, there are a couple of things to keep an eye on. The lower support for one of the director nominees and the pushback on executive compensation suggests that some shareholders have concerns. It's important for the company to listen to those concerns and address them. Also, the proposals about issuing and managing shares give the company more flexibility, but they also come with some risks. If the company issues too many new shares, it could dilute the value of existing shares. If it resells treasury shares at too low a price, it could send a negative signal to the market. Overall, nVent Electric seems to be on a solid path. The shareholders are engaged and the company has the tools it needs to manage its business. But as always, it's important to stay vigilant and keep an eye on those potential risks. Alright, that's our breakdown of nVent Electric's latest filing. What's your take on these votes and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.